ladies and gentle boys. Today we're going to talk about Fibonacci and how you can use that to your advantage in the market. So before that, we actually need to head into something called fractals, because Fibonacci is measured in fractals, and let me explain exactly what a fractal on the chart is. So a fractal high, which is here, fractal high right there. Fractal high is basically the high point where the two candles before and the two candles after is lower than the high point right there. Meaning that this candle right there needs to close before this is a fractal high right there, right? And then you have the fractal low, which is right here, right? The two candles after or before needs to be higher than this low point right there, right? And these two candles after needs to be also higher than this low point there, and this candle needs to close, and that's a fractal low right there. If you're uncertain to find those fractals right there, you can use an indicator called Williams fractals as well. It's in here, right? So basically, since Fibonacci is measured in fractals, it's natural for us that we're going to use those to scale out our Fibonacci. And what I mean about that is basically we're going to use high points and low points in the market to find out where price is likely to go next. So this is the Fibonacci retracement tool right here. So let me just explain shortly and briefly how this works. So for example, if the market is turning around, let's say the market is going to the downside in here. I'm not sure I can mark everything up with this, or maybe I should push there we go. Yeah, so if the market is just going on its way down and suddenly spikes to the upside like this, right, and you got the fractal low right there and you got the fractal high, right, you can use this measurement tool to find out how much the price is retracing. And let's say it's retracing back into the green zones in here, then your expected target to the upside for extension should be this place right here. And this is a perfect thing for you if you are uncertain to where you want to put your take profit zones, right? The extension level is basically taken from the retracement to the extensions right here. And then when this has happened and you got a new fractal high right here, you're taking your new tool from, for example, if you have your low right here, right? If the low is right here, you take it to the new extension right there, and then you can delete the old one, and you're measuring how far back the price is going again. And then if it goes to the blue, we're looking for the blue zone on the top side to be hit, basically, right? So I'll show you in the market how this actually works. One take. We take one takes here. So let's start from anywhere. We can start on any time frame. Let's do on the 1 minute. Pretty fun on the 1 minute as well. So is this? Oh, this is where we are right now. Okay, so let's just take a random point in there. Let's start with this low right here when the market is starting to move to the upside again. So basically in here, you can see that this low right here is a fractal low, right? This is a fractal low because this is higher. These 5 candles is higher than this point right here. So this is a fractal low. So we're looking for the first fractal high right there. So you can see that this high here is a fractal high because these two candles is lower than this high point, and these two candles is also lower than this high point right there. So if you take the measurement tool from this point to this fractal high right there, you can see that price went straight back into the green zone in here, and when it retraces back into the green zone, the green on the top side is our target right there. If you entered right here, right, that's your target, current target. And then you're looking for how far back did the retracement go, right? So you can see that it retraced a maximum right there. Which one is the low? Those are pretty much the same low in there. So you take this low right here and measure a new retracement down, and you're trying to figure out, okay, so how far back did it actually retrace again, right? So it retraced back to purple in here, right? Purple. So if it retraces back to purple, purple is the target you're targeting right now. So let's say you took a trade here, yeah, into this demand zone, and then placed your stop loss under here. Now you know pretty much where to put your target right there on this purple zone right there, right? And then the price continues. So this is basically a trend continuation tool right here. So after the target is hit, you're looking for the first fractal high, which is this, when the target is hit. The first fractal high after the target is hit, basically. So you take it here, from this low point right here, this top side right here, and you start measure again, right? And everything behind here is pretty much invalid. You're just looking behind this high point right here, where how far back is it retracing, right? So it's retracing into the green zone. So right here, you could potentially take this long and then take it to the green zone again, right? So now you have some really decent targets you can go after. Let's say you just entered in here. Your stop loss is wherever you feel like your stop loss needs to be, right? And then you target the green zone in here. And then you can see also the candle that hit right here is also the fractal high. So you take from the low point again, a new measurement tool, right? So this was the lowest point on the retracement down. And then this was the fractal high when the target was hit. So we're remeasuring this, right? So you can see that, okay, so it's currently going back into the green, right? Currently going back into the green, and right here, green is the target. So if you entered, for example, in this demand zone in here and targeted this, you could potentially have a really decent trade to the upside here as well, right? Pretty simple stuff right here. Yeah, that was basically pitch perfect. I would probably have a little bit better stop loss in here, but yeah, something like this, right? Now you know where you could potentially put your target next. So let's start measuring again, because this is what you can do over and over and over again, right? So the deepest retracement was actually this point right here, I believe. So let's see. This low, you can check here, right? This low right here was 659.20, same. Yeah, basically the same. So it doesn't really matter if you use this one or this one in here. So let's use this one right there, and you just remeasure again. So into the green right there, into the green zone, and then you're looking for the green target again until the market is turning around, right? So you're basically using this tool until the market is turning around. And when the market is turning around, you're doing the opposite right there. Doing the opposite from the fractal high to the first fractal low. Where is the first fractal low? It's all the way in here, right? That's the first fractal low in there, right? And sometimes the market just goes haywire into the upside and doesn't give you the what you want, basically. So you can see it hit the yellow line on the top side, and it broke through to the upside again. So we are basically going bullish from there, right? Basically going bullish from there. So as soon as it broke to the upside right here, so we can remeasure again. So it was this low to the first fractal high, which was all the way to this point right there. And then we can see a retrace into the green zones in here. So do we come deeper in here? No, we don't, right? So green zone in here, and then the green zone on the top side is the target right there. And then you just continuing doing this over and over again. So that's basically how you can utilize the Fibonacci tool to your advantage, right? Using it retracement to extensions to find your targets. Another way to use the Fibonacci as well is to find, I'll show you, it's pretty cool. So let's say market right now, it's going haywire, right? It's going haywire in here. So you can see it retrace down to the green zone on the daily right there. So currently our target right now is 5,914.11 on S&P. So what you could potentially do with when you have measured everything up and it's in the correct manner, you can use all of these lines as support and resistance lines as well if you want to. Yeah, because price is usually respecting those lines really nicely. Really nicely. So you can see that, for example, price came in here, stopped right here, broke through, stopped right here, right? Broke through, stopped right here, and then broke to the upside, stopped right there, bounced here, then stopped, halted right here, and then bounced here again up to this zone. So you can see how effective the Fibonacci lines is in this manner as well. If you just want to use them as support and resistance lines, that's also possible. That's basically what I got. This was the daily. You can include the monthly. You can include a lot of things if you want to have some more lines for supporting the resistant lines. I find the daily really good. I've tried them weekly, monthly, and everything, and it's working really nicely. So if you're using the Fibonacci in another manner and you find some success with it, post it in the comments below. See you guys on the flip side.